Recording started.
Ooh, okay. Who knew? Okay. Good morning. We are going to do Chapter 4 today. Chapter 4 is one of the smallest chapters we do. Very few numbers in it. It's about cash and internal control. And we are out of order. We did Chapter 4 today, and the reason for that is just logistically. I don't want you to have two homeworks in one weekend. Chapter 3 takes 3 class days. So if we had started Chapter 3 today, we would do Chapter 3 today, Wednesday, and next Monday. So the homework for Chapter 3 would be due next weekend, and the homework for Chapter 4 would be due next weekend because we would cover it next week. And so we'd have 2 homeworks and an exam to study for, and that just felt wrong. So we're doing Chapter 4 today. We will be done with Chapter 4 today, and we will be starting Chapter 3 on Wednesday. Also coming up on Wednesday, I'll talk a little bit about your exam. Exam information I will have on Blackboard in the next 2 days or so. It's ready to go. I just want to make sure I have all the releases ready. Depending on what section you're registered impacts how you take the exam. So anyways, the exam information will go up in the next few days. I'll talk about it some on Wednesday. We will start chapter 3 on Wednesday. So today is our Chapter 4 day, and that's it. So before we get started, Brian's going to talk, so we're actually going to give him the microphone for a while, and I'll take his role. Woo! Okay.
Oh, I don't have to worry again. Nice. Hi guys. This is really cool. I'm the treasurer of Beta Alpha Psi, and I'm here to talk to you a little bit about Beta Alpha Psi and the Accounting Association. First of all, I just wanted to tell you guys our meetings are on Thursdays at room 215. Yeah, at 5 o'clock. There's free pizza and free pop every week, and starting this week, we're having professionals. Can you hear me? We're having professionals come to our meetings and speak, give presentations, and then after the presentation, they can network with us. So our basic goals are to, network with professionals and find jobs for our members. If you come to the meetings, apply yourself to the internship program, which is through Career Services. We get a good number of kids with internships. Really, all you have to do is go apply yourself and hope for the best. And a lot of our members, especially our officers, going out, they've all got jobs. I know I have a job waiting for me once I graduate. So there's lots of opportunities when you join Beta Alpha Psi to boost your resume. You could become a member. Obviously, that's kind of the lower point, but there's also opportunities to become an officer, as well as doing community service, which people like to see on your resume. As an officer, you could get cool perks like going to Anaheim, like we went to. It was a lot of fun. We went this past summer. I've been to Baltimore, and I know a lot of people have been to Indianapolis and Chicago with Beta Alpha Psi. So there's a lot of opportunity for travel as well, and it's a lot of fun. We may be a professional fraternity, but we also have a lot of social events. As you can see up there, we do like a little bowling day, and we do other things too. We go to Cedar Point every year. We went to Cedar Point on the coldest, rainiest day last year, but it was still fun. We got to ride the Millennium Force like twice in 5 minutes, so it's pretty worth it. I also want to kind of segue into what Dr. Tietz is about to talk about, the Meet the Accountants Night. Meet the Accountants Night is tomorrow night. I think you probably should have already signed up for it if you're going to do it, but it's good to know about events like this because it's the best way to network with professionals. There's going to be like probably 100 professionals or so. Don't wave it around. Sorry, I'm waving my phone around. Her phone. There's a bunch of professionals coming to Meet the Accountants Night tomorrow night. So it's a really good opportunity to talk to them, impress them, and hopefully get an internship from them. if you haven't already done it, like I said, I'm not sure if you can still do it. They'll talk to them about that. So I'm just going to leave that and let her talk about it. We're also having our golf outing. I believe it's the 27th or the 28th, something like that. It's Friday, a couple Fridays from now. And basically that is for BAP members, and we're going to invite professionals to basically do a golf outing, and you would come, you would play golf with the professionals. Don't worry if you don't know how to play golf. Just come, because nobody knows how to play golf. Even people who know how to play golf don't know how to play golf. So don't worry about that. Just come, have fun, talk to professionals. It's a good way to show them you can get out of your comfort zone, and they really like to see that. Again, meetings are at 5 o'clock, room 215. There's free pizza and free pop every week. We would encourage you guys to come. It's a really good opportunity for you guys as well as BAP to get the best students out. So thank you for your time. Appreciate it. Any questions for me? 5 o'clock.
No.
The meetings are at 5 o'clock. On Thursday.
Where?
Room 215.
Okay.
Anything else?
No, I won't. Okay.
It's been fun.
Yeah. Okay. Just to follow up on Meet the Accountants Night. If you're an accounting major, first of all, you do not need to sign up ahead of time this year. You just show up. If you're an accounting major, this is a great event if you can squeeze out a little bit of time. The event is over in the Student Center in the ballroom on the second floor. It runs from 5:30 to 8. Your commitment is certainly not from 5:30 to 8. You could come for 15 minutes if you just want to see what it's about. Can you turn to the next slide? Okay, and that'll, okay. What I've got on the screen here is just one of the pictures from last year. This is the ballroom. There are 30 to 40 firms set up there, and they have representatives. Most of them have representatives who are recent graduates of Kent State, but these are the accounting firms and other companies that hire accounting majors. The dress is professional, business professional. I do take my group of accounting freshmen, my FYE class, with me to their, and they wear kind of business casual because they're younger and they have name tags that say freshmen. But at your point, if you have a suit or a professional attire, if you have any questions about that, you can email me. But you would go to any time from 5:30 to 8, show up, and I will be right at the front table as you go into the ballroom itself because my freshmen have to check in with me. So I'm happy to talk with you then. You can email me. But if you're an accounting major, this is one of the single best things you can do for yourself at this point. You're probably not at the point where you're looking for an accounting internship, or you're not at the point where firms would be saying, oh, we want to hire you, even though you haven't finished any accounting classes yet. But the advantage to you to going to this event, even if it's for just 15 minutes to look around, is to kind of see what it's like. So if you're an accounting major, next fall is when you would be looking for an internship, and this is for real next fall for you. So next fall you have to go and you have to be dressed professionally. You have to know how to talk to the professionals. So my advice to you would be to go to this event tomorrow, and sometime between 5:30 and 8. You don't have to go for the whole time. You don't need to sign up ahead of time. You do need to dress professionally. They will not let you in the door if you have jeans on or shorts or flip-flops or those kind of stuff. If you're not dressed appropriately, they won't let you in. But, okay, I'm cutting out. I don't even know how to fix that. No, I'm not blocking my mic. Okay. Could be connection. I'll just deal with that. So, this is a wonderful event. Accounting majors, I cannot urge you enough to go get the lay of the land. The nice thing is you walk around, talk to firms, but they have a lot of giveaways to pens and highlighters and kind of cool stuff. And there's food there too. And it is free, but it is a wonderful event to go to. And complete details, I have a URL for it. And I think I emailed this out, but that's what that's about. So meet the accountant tonight. If you can spare a little bit of time tomorrow evening, it's a good event, and I'll be there, and you can check in with me if you want some assistance about what to do once you're there. Okay, next one. Reminder, the get out of jail free opportunity. I've had some people maybe 10 people take me up on this. I would urge you to stop by my office. It's really painless, I think. And you just share something interesting about you. And please do not come and tell me that there is nothing interesting about you, because there is something interesting about everyone. So you'll come, I snap your picture so I remember who you are, and then anytime before December 2nd you return and you tell me what quiz or homework you want to do over, and I open it up at that point for you, and you have a week to redo that. So it's a way to get an extra do-over. Okay. Okay, now what's due this week? Saturday, we have Attendance Quiz 8, which covers today and Wednesday. We have the Chapter 4 homework, which will be essentially done with today. And we have Video Quiz 9, which covers Chapter 3 videos. If you have time, it would not hurt to watch the Chapter 3 videos before Wednesday. I'm certainly not going to require that, but we are starting Chapter 3 on Wednesday. Okay. So let's just kind of review from last week before we get started in Chapter 4. Okay, if Boring Company pays $500 on account, what's the journal entry? Now, on this one, Alyssa, you're right here. Okay, can you give me one account that would be involved there? Accounts payable. Okay, great. So accounts payable, what kind of account is it? Liability account, okay. And are we increasing or decreasing it? Decreasing it, because we're paying $500 on account, so we're decreasing accounts payable and liability. So are we going to debit or credit it? Debit it, yes, excellent. Okay, so we're going to debit it, so I'm going to stick with you, and before we put up the answer, what would the other side of this account be? You picked the harder one. Cash. What kind of account is cash? Asset. And we're going to debit it. Credit it. You're right. Yeah. See, you're right. Okay. So let's go next slide. Okay. So we debit accounts payable. It's a liability. And we will credit cash, which is an asset. So we're decreasing cash. We're decreasing a liability here. And that's what the journal entry looks like. So just a reminder, you're going to need that throughout the semester, that debit credit handout we had last week. It's on Blackboard if you want to refer to that. Okay, now a couple questions. And we're now into Chapter 4. And this one's interesting. The type of fraud committed by employees of an entity who steal money from the company and cover it up through erroneous entries in the books is called. Is it A, misappropriation of assets, B, fraudulent financial reporting, C, embezzlement, or D, collusion? Now keep in mind, you're answering for the proper accounting terminology. So I'm going to walk around and solicit answers on this one because I think we'll get answers all over the board. Okay, so what do you think the answer is?
Fraudulent.
You think it's B, fraudulent financial reporting. Okay, I'm going to do a poll here. What do you think? You're going to say B also? I already asked you, Alyssa, so we'll go B. Let me think. What do you think? You were thinking A. Okay. B? Okay, so we have an A. We have two people said A. We have some Bs. Okay, why don't you put up the poll? Let's see what online we're answering. What? Brian can see it, yeah. 8 people said A. 7B? 27B. 7C. Okay, so let's go ahead and go to the next slide. Yeah, well, wow. Okay, the answer is A. Okay, keep in mind, we're talking about the accounting terminology. If we steal money, that's misappropriation of assets. Okay? Fraudulent financial reporting. Fraudulent financial reporting is we make up entries. We say, oh, we have more inventory than we do. Let's go ahead and write a journal entry for it. This is actually misappropriating assets, taking assets. So the answer on this one, the type of fraud when employees steal money and then cover it up, is misappropriation of assets because assets are actually leaving. When we have fraudulent financial reporting, that's kind of a generic term, but we can have fraudulent financial reporting without stealing any assets. We can simply say, that's what Enron did. Enron would just make up entries. They said, how much do we need revenue to be? And they would essentially write a journal entry for how much revenue they wanted. And so that was what was going on there largely. Okay, another one from the videos. External auditors are responsible for maintaining a company's system of internal controls. True or false? Yes or no? Okay, what do you think? False? Okay. What do you think? False? 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 You know what happened last time when the popular answer? No. Okay. Okay, why don't we go to the next slide and display the poll simultaneously? Yeah. Yeah. Okay, great. So external auditors are responsible for maintaining a company's system of internal controls. That is false. Who's responsible if external auditors are not? You said managers?
Internal?
How about managers?
Managers.
Managers, yes. Okay. Management is responsible for maintaining internal controls. Okay, management is ultimately responsible for maintaining that system of internal controls. Obviously, our auditors help. Our external auditors test the system. Our internal auditors test the system and make recommendations. But management is ultimately responsible for that system of internal controls. Okay, now, a list again. What is not an objective of an internal control system? A, safeguarding of assets. B, compliance with company policies. C, compliance with legal requirements. Or D, risk minimization. What do you think? D? Okay. D? Okay. Okay, yeah, groupthink, no. Okay, what do you think? Okay, okay. Why don't we display and go ahead. Okay, and the answer is indeed D. Risk minimization is not an objective of an internal control system. An internal control system is set up to safeguard assets. It is set up to make sure we're complying with company policies and with legal requirements. Then risk minimization is not an objective in internal control. On the next slide, okay, So our objectives of internal control, just to review, safeguard assets. We want to encourage employees to follow policy, promote operational efficiency, ensure accurate, reliable records, and comply with legal requirements. So minimization of risk is not in that list. Okay, so let's move on. We're going to we're going to temporarily leave internal control. Well, actually, we're going to bank reconciliations, which are an internal control tool. A bank reconciliation allows companies to prove out that its cash is recorded correctly. A bank reconciliation, if you have a checking account, you do a bank reconciliation to make sure you've recorded everything and that the bank has recorded everything correctly as well. What you see on the screen now is a basic bank rec form. I'm big about forms because you can fill things in. So on the left-hand side, this isn't a legal form or anything. This is just a suggested format. We start with the bank balance. We add deposits in transit. Deposits in transit are deposits that we've made at the bank, but they're not there yet. So when you go into the bank, sometimes you go into the bank to deposit a check. If you do that, I don't go to a bank too often anymore. You can do it on your phone. But when you deposit a check, there'll be a sign that says all transactions after, say, 3 p.m. are posted the next business day. At that night, that deposit would be a deposit in transit because the bank doesn't have it recorded yet. Outstanding checks are checks you've written, but the bank has not received them yet. We might have bank errors, and bank errors can go either direction. But we start with the bank balance, we add our deposits in transit, we subtract our outstanding checks, we add or subtract errors, and we get an adjusted balance. Now that adjusted balance is our true cash balance. Over on the right-hand side, we start with the book balance. So this is what we have in our general ledger cash account. That T, if we did a T account, it would be the balance of that. We would add any collections the bank made on our behalf that we had not recorded yet. We would also add any interest revenue that we had earned, and EFT receipts. EFT receipts are electronic funds transfer. We would subtract service charges. We would subtract NSF checks, non-sufficient funds checks, EFT payments, and then add or subtract book errors to come up with our adjusted balance. I'm going to pause for a minute until I see the pens down, so I'll give you time to catch up, and then we'll pick up. I have a couple more things to say about this before we leave this slide. Okay. We're going to see this again coming up here. So that's the basic bank rec form. Again, EFT stands for electronic funds transfers. So those are kind of like wire transfers that the bank gets. Those are electronic funds transfers. A lot of times companies, their clients or customers will pay them via electronic funds transfer, so we have to add in those if we have not recorded them yet. NSF checks, non-sufficient funds checks. These are checks that we've collected from customers or wherever, and we deposit them, but then they're non-sufficient funds, meaning whoever wrote the check, they're not any good. There's no money in their account. So the bank bounces them back to us. So this is our customer's check. If a customer's check comes back to us, then we no longer have the cash, so we have to remove the cash, but we also have to reinstate the accounts receivable that they still, because they owe us. Even though their check's bad, they still owe us. We don't just let them go. So at the bottom total, we have an adjusted balance on the bank side, and we have an adjusted balance on the book balance. Our bank statement is said to be in balance when both of those things at the bottom are equal. Okay, we want the adjusted balance of the bank to be equal to the adjusted balance of the book. books. And we're going to go through an exercise coming up. As a matter of fact, we're going to go to exercise S4-8, maybe? Oh, okay. Okay, so short exercise 4-8. Pardon me? Okay. Okay, yeah. Okay, I'm like, it caught up on my phone. Okay, so exercise 4-8. Can you turn to me? Okay, so 4-8, what we're doing is we're doing a bank reconciliation. And it tells us we have a balance of, tells us outstanding checks, gives us a bunch of information, and the bottom line, it says prepare a bank reconciliation to determine how much cash they actually have. Okay, so what I've done at the bottom of the screen here is I've put that little form. Notice that I've skipped the line for bank errors. I'm just telling you that on this one there are no bank errors. So I thought, well, why use up the space if we don't have it? So I put this form, and what we're going to be doing is we're going to be filling this out. Okay, so the first thing we're going to do is we're just going to go through, and I'm telling you how I would approach this. So I know a bank reconciliation. If I do a bank reconciliation, it's going to look like this. So that's why I filled it in, because it's a lot easier to fill in things than to figure out where they go in a blank form. So we're just going to start, we're going to read the problem, and every number we come to, we're going to figure out where it goes in the form, if it goes anywhere. So the first number we're going to look at okay, that balance of $2,540. Okay, so the sentence says the cash account of Rampart Corp recorded a balance of $2,540. So where would you put that on that form? Well, okay, so it goes in one of the balances. Now, is that the bank balance or is that the book balance? Keep in mind the bank balance is the bank statement balance. The book balance is what the company has. The book balance, yes. So next slide. Okay, so book balance. So we put that $2,540 by the book balance. Okay, because we have two balances here. We have a bank statement balance and a book balance. Book balance refers to what we've recorded as the company on our books. We call it the books when it's recorded by us. Okay, so working our way to the next number. Is the included were outstanding checks totaling $900. Okay, outstanding checks. Where are we going to put those? Okay, she says subtract on the bank balance, right? Bank balance column. Yes. So let's go to the next slide. Okay, yes, absolutely right. So we're going to show that outstanding checks, the $900 subtraction. So we are following that template. Okay. Okay, next slide. Okay, now the next number we've got, there with you. What are you going to do with that next number, the $400? It's a deposit of $400 that did not appear on the bank statement. Add it to the bank balance. So let's go to next slide. Yes, we call that a deposit in transit. I guess I don't have an arrow for it. Okay, deposit, oh, we went one slide too far. Oops. There. Yes, okay. $400 we added as a deposit in transit. Okay, next number we have the bank statement, which came from Tri-Bank, listed an October 31 balance of $3,000. There, $3,675. Okay, notice that that's the bank statement balance. So next slide. Okay, so that's where we're going to fill that in on the bank statement. A bank reconciliation is just filling in the numbers that you're given into that form. Okay, next number, included in the bank balance, so it's telling us that the bank already has this. If the bank already has it, chances are we don't need to put it in the bank column. So there's a hint. Was an October 30th collection of $670 on account from a customer who pays the bank directly. So this is a collection from a customer. So let's go next slide. So where we're going to see that was we're going to add the bank collection. So there wasn't exactly a name for that in our template, but we know we need to add it to the book balance. The customer pays the bank directly on our behalf, so we have to add it to the books. We don't have it recorded yet. Okay, next item. The bank statement also shows a $30 service charge. So where are you going to put the service charge? Well, first of all, does it go in the bank balance column or the book balance? Book balance, because the bank already has it, right? So we need to make sure our books get it. And then are you going to add or subtract it on our book side? Subtract it, yes, because it's a service charge the bank is charging us. So what we're going to do is we are going to subtract that $30 service charge. Okay, next item. Okay, next item. $20 of interest revenue that's on the bank statement. So which column is it going to go in, the bank or the book? Book, because the bank already has it. So are we going to add or subtract it? Add it, yes. So let's, yep. We will add the $20 service revenue to the book balance. The bank has it. We don't have it yet. Okay, this one. Okay, so the last one. The bank returned an NSF check for $25. So which column is it going to go in, bank or book? Book, okay? And are we going to add or subtract it? Subtract it, yes. So we will subtract the $25 NSF check. Okay, so at this point, we've made it through all the numbers in this exercise. So the next thing we have to do is come up with the adjusted balance of each column. And that's simply taking the balance. So in the bank column, we take the $3,675, add the $400 deposit in transit, subtract the $900 outstanding checks, and we end up with a balance of $3,175. We do the same thing in the book column, and we get that $3,175 as well. Okay, the whole point of the bank balance, the bank statement is to make sure our book balance equals our bank balance. Now, not every one of those things requires an entry on our books. First of all, the bank items, the things in the bank column, those are timing errors. Those are going to work themselves out. The deposit in transit that the bank doesn't have yet, it has the next day. If the statement had been printed the next day, it would be on there. The outstanding checks will be cashed, and those will come out. So we don't need to write any entries for the bank balance items. Okay? Now, On the book balance, there are some things we need to write entries for. We look at the bank collection. They collected on our behalf. That is not a timing error. That we need to write an entry, a journal entry for. We need to put it into our books. Interest revenue, we need to write a journal entry for. Service charge and NSF checks, we also need to write. As a rough rule of thumb, we need to write journal entries for the book items, usually. Bank items are typically timing errors, but keep in mind that on either side, we can have errors that need to be corrected. And in that case, an error, depending on the errors, all bets are off. We don't know if we have to add or subtract them or if we have to write an entry or not. Depends. It's situational. So we'll see one later where we have an error to correct, I believe. But the errors, you just have to analyze your way through and say, did we record this? Is it our error? Is it the bank's error? If it's the bank's error, we don't record it. They fix it, but we have to make an adjustment. Okay, so next one. Okay, so short exercise 410. This, we're not going to do any numbers particularly. I guess we could do one number if we wanted to. But we're given a bank reconciliation. So notice on the left-hand side, there's that bank side where we're taking the balance of the bank statement. We're adding the deposits in transit, subtracting outstanding checks, getting an adjusted balance of $3,690. Then on the book side, we take our beginning book balance, we add and subtract the things, and we come up with a adjusted book balance of $4,400. Right off the bat, we know there's a problem because the bank balance does not equal the book balance. This is triggering that something's going on, and we have some suspicion that an employee has been stealing from the company. And it certainly, this statement, while not definitive proof, would indicate that that has occurred. The bank statement says we actually have, or the adjusted bank statement says we actually have $3,690. The books, though, show $4,400. So it looks like the employee has probably stolen the difference between $4,400 and $3,690. So the only computation in this entire problem is to take the difference between the two adjusted balances, and it does look like the employee has stole some money. And that's why the bank reconciliation is an example of an internal control. Okay, got a couple of questions here to do with bank reconciliation. So the first one, every adjustment on the bank side of the bank reconciliation needs to be recorded in the books. True or false? What do you think? You're going to go with true? Okay. You're going true? Okay. Okay. What do you think? True? Okay. What do you think? True? Okay. False? And why? Yeah. Okay. Let's go ahead and display the answer in the poll. You are absolutely right. On the bank side of the bank reconciliation, let's think about what entries are there. On the bank side of the reconciliation, we have the outstanding checks. We have the deposits in transit. Do we have to write journal entries for those? No, because we've already written the entries. The bank just hasn't caught up. Typically, the adjustments on the bank side of the bank reconciliation are timing errors. So that deposit in transit, it's going to be there in another day. Outstanding checks, we've already written the entries on our books. We've already recorded the deposit on our books. We've already recorded those checks on our book. So we are wanting to not record those. So this is false. Okay, so now we're going to do 419A. Okay, so 419A, what we're going to do is we're going to display the answers real quick. You can make a note of them, and then I'm going to talk about some of them. Here we go. Okay, 1's D, 2C, 3D, 4C, 5A, 6 and 7 are B. So I'm going to go quiet for a minute till I see pencils down, and then I'll talk about some of those. Okay, so let's just talk briefly about some of these. The idea is to say whether it's A in addition to the bank balance, B a subtraction from the bank balance, C in addition to the book balance, or D a subtraction from the book balance. You know that template we did at the very beginning when we were doing bank reconciliations? That's a really good thing to put on that reference sheet for your exam as well. Because if you refer to that, you can say, oh, well, I found this item. What happens to the bank statement? What happens to the book balance? So that's a good item because you can use that template to get through this exercise pretty easily. So the first thing, a service charge. Where does a service charge show up? Well, it shows up on the book side as a deduction. So that's why it's D. Okay, now C, this is where I talked about you have to, number 2, where you have to reason your way through an error. So this is an example of an error we need to fix. Book error. Okay, so book error, that says we wrote an entry wrong. We messed up. We debited cash for 100. The correct debit was 1,000. Okay, so we debited cash. Was that increasing or decreasing cash, Alyssa? Increasing. That was increasing cash. Okay, so we're saying we increased cash for 100. We should have increased cash for 1,000. So how much was our error? 900. And do we need to add or increase or decrease cash to correct it? Yeah, we need to increase cash for 900 to correct it, right? So we actually need to add to cash, and that's where we get C. Okay, number 3, an NSF check. That's just a boilerplate subtraction from the book balance going back to our template. 4 is C, in addition to the bank balance for a bank collection of something on our behalf. 5, deposits in transit, comes right off our template. Okay, now 6, bank error. Okay, so that's screaming bank error. So we know it goes on the bank side. So now we can say we know it has to be either A or B. Okay, a bank error we don't record. The bank is going to fix it. The bank credited our account for a deposit made by another bank customer. So remember that banks are backwards. Banks credited our account. They increased our account because the account is a liability to the bank. So the bank credited our account. They gave us money that was another customer's money. We don't get to keep that. The bank is going to ultimately correct that, so they're going to deduct it from our balance. Okay? So this is where you need to think about that a bank uses debits and credits different from us. Our account to the bank is a liability. So they credit us, that's an increase in our account. They increased our account in error, so we're going to have to deduct it from the bank side. Okay, and then 7, outstanding checks are a subtraction from the bank balance. Okay, so that's pretty straightforward. Okay, so true-false question. Differences between the bank statement and the company's cash account are primarily the result of a time lag in recording transactions. True or false? What if I highlighted the lots of emphasis on part? Okay, why don't you go to the next slide and put up the results? Differences between the bank statement and the company's cash account are primarily the result of a time lag in recording transactions. Yeah, when we look at the bank statement, we're comparing the bank statement to the cash account. The bank statement, and you were right. I was just trying to, yeah. Okay, so when we look at the bank statement, on the bank statement side of things, those are primarily timing differences. On the book side of things, if we say the difference between our book balance and the true cash balance, then that's going to be more things that we need to record. Next slide. Okay, we're not done. I just want to reiterate what's due this week. Okay, so just a reminder, what we are going to do now, Pop quiz time. Aren't you glad you're here? So, this is the easiest quiz you'll take the entire semester. Guaranteed. Okay, first of all, if you're in the classroom now, you need to log out of your device just so you don't get, so it doesn't look like you're taking it twice. If you're in the classroom now, you're going to take it on paper, super easy. Okay? So, that's the classroom, people. Okay, you get 5 minutes for the quiz. Believe me, you're not going to need it. I'm going to hand out the quiz, by the way. So, okay, and I need the quiz back. The most important thing, so people online, hold on. If you're not in the classroom, hold on. I'm going to take care of you. You will also take the quiz. But if you're in the classroom, I guess I'm going to hand out the quiz now. If you could do me a favor, I'm not going to hand out the quiz till I'm done explaining to both parties what we're doing. So if you're in the classroom right now, you take the quiz in paper, okay? And I'll collect them from you. We've got plenty of time. I left oodles of time today so that you don't have to be anywhere else and committed till 9. So we'll do that. So in the classroom, could take 5 minutes at most. Okay, so now online, let me address this to the online people. You have to have been logged in for a significant portion of class. You can't suddenly appear right now, okay? Then what you're going to do is we'll give you a URL, and you'll go to the URL, you'll type in your name. This is extremely important that you type in your name and your Kent State email address, just because I do have students with the same names, so I need both pieces of information. And then you'll answer the 2 questions. You'll click submit. You're done. It's not going to take very long. The quiz is going to close after 5 minutes. So, and it doesn't start till you get it, so you're good. I mean, you can't get it at 10:30 this morning and have 5 minutes. It's only going to be open for this small window. But this quiz is very easy. So what we're going to be doing as I'm handing out the paper quizzes, Brian's going to put up the URL for the online. You can take it only one time online. Do not take it in paper and online because you'll hear from us. I'm not dealing with online. Okay, so the recording's running. So if you're watching this later, it's just going to continue to record, so you're done with watching this, but we're not cutting the recording until the end of class. So I am going to go quiet now. I'm going to turn off the recording mic. So if you're online, you will not hear me talk anymore. Well, we're going to go to the next slide. Okay. Yeah, we will be typing the URL in the box in just a minute, but we're not there yet. Okay, so before we get there, if you're in here, in this room in front of me, any questions? You know what you're doing. You're not taking it online. Okay. Okay, then if you're online, Brian just put it up, so now we're quiet. Have a nice day, but we're still recording.